false breakouts and how to avoid them. Welcome to this YouTube channel. My name is Patrick, and in today's video I'm going to be showing you how to easily differentiate between a false breakout and a real breakout so that you can be able to avoid unnecessary mistakes. So without any waste of time, let's get to it.
Now, what is a breakout? If you look at market structure and you notice that price seems to be moving within a supply and demand zone, within two major key levels, it can be support or resistance, and then suddenly price closes above or outside of the key level with a full candle. The normal thing that should happen is that price comes back to retest the major key level which it broke out of, and then after the retest it continues in the direction of the breakout. That is why you find most people entering a trade right at the retest of the breakout, hoping to catch the move in the direction of the breakout, only to find that it was a false breakout. Price is now pushing down in the opposite of the breakout, and they start blaming their broker or whatever they may blame. But really, the broker has nothing to do with this. It's usually the big banks, the institutions. They push price outside of the major key level because they know that is where the liquidity is. That is where most people place their stops. And then after collecting all that liquidity, they use it to push price back in the or right in the opposite direction. And these things you can easily avoid as a trader. And how do you avoid this? This is what you do. After the breakout, what you do is, first thing, you wait. You wait and see what happens. You wait for the market to play out. Let me put it like that. If it is a real breakout, after the breakout, price has to push back to retest the major key level in which it broke out of. And then after retesting that major key level, what you do is you draw a key level where price returned after the breakout. Like you can see right here, price broke out of the key level and then went back to retest the major key level, and then you draw your own key level right where price returned. You draw your own key level right where price returned on its way back to retest the major key level, as you can see the examples right here. And then after drawing these key levels, you wait again for price to play out. If it is a real breakout, the normal thing that should happen is that price will come back to break out the key level which you have drawn. And then once price has closed outside of that key level, has broken that key level with a full candle, not with a wick, with a full candle, that is where you can take action. Once price has broken out of the key level that you have drawn, I can say at the breakout of the retest, once price has broken that key level, that is where you can enter your trade. You can enter your trade. As you can see this example, price broke out, came back, and then you draw your key level and you wait for price to come back and close above this key level that you have drawn. And then once that happens, that is where you can enter your trade. If it is a downtrend, that is where you can enter the sell trade. Or if it is a bullish breakout, that is where you can enter the buy trade and put your stop loss right below the measure key level.
Alright, that's it about breakout and retest. Now, in my videos, you're gonna be hearing all sorts of sounds, chickens, birds, dogs, because I'm at a farm. I'm going to show you around someday. Alright, so please try to compare this kind of information with what you see on the charts so that you grow, you learn. You may not learn it overnight, but try to be patient and keep on learning. So if you want free mentorship, just stay in the channel. I'll be here to help you for free. All right, so much love. See you tomorrow on my next video.